Are you doing well financially? Sometimes we get so focused on the day-to-day flow that we don't stop to analyze how our finances are doing. By neglecting this care with finances a little, it ends up generating the feeling that we are not doing well financially. But that's not necessarily true. Come with me, wizard. In this video, we'll show you 10 signs that indicate you're doing well financially. 1. You can pay your bills on time. It may seem like a seemingly simple thing, which may seem basic to some, but it is actually a great indicator of financial health. Paying your bills on time shows that you not only manage your money well, but also prioritize your financial responsibilities. This avoids interest and late fees, which may seem small at first, but over time, accumulate a significant amount. When you have the discipline to pay your bills on time, you are also more able to plan for the long term, save for emergencies, and invest in your future. It means you are aware of your recurring expenses, have a budget that works, and know what your financial priorities are. In an era of instant gratification and excessive consumption, being able to pay your bills on time has become an increasingly difficult challenge for consumers. Statistics reveal a challenging reality for the American and European populations. In the United States, a study conducted by the Consumer Financial Protection Bureau suggests that approximately 24% of Americans cannot keep their bills up to date, reflecting a concern with financial management and highlighting that a significant portion of the population faces financial difficulties. In Europe, the situation is somewhat better. A Eurostat report indicates that about 10% of citizens in Nordic countries can pay their bills on time, contrasting with lower rates in southern European countries where economic difficulties are more pronounced. 2. You can control your expenses. Controlling your expenses means understanding where your money is going and making conscious choices about how to use it. This goes far beyond simply cutting unnecessary expenses. It's about aligning your spending with your values and long-term goals. When you reach this level of control, the money that leaves your pocket is a strategic decision, not a random or impulsive move. One of the greatest advantages of controlling your expenses is the ability to save and invest more effectively, using money consciously instead of making impulsive purchases or frivolous spending. Moreover, having control over your expenses brings invaluable peace of mind. The anxiety and stress that often accompany financial worries decrease significantly when you know where your money is going and have confidence that you are making coherent financial decisions. This peace of mind is priceless and a clear sign that you are doing well financially. Controlling your expenses also means that you are prepared to deal with the ups and downs of financial life. Whether facing an economic crisis, an unexpected career change, or an emergency expense. In the United States, a report from the Federal Reserve indicates that approximately 40% of Americans would have difficulty covering an unexpected expense of $400 without resorting to borrowing, suggesting that a significant number of people may struggle to control their daily expenses. In contrast, in Europe, a study conducted by the European Central Bank shows that about 60% of Europeans claim to have the ability to save money monthly, indicating greater control over daily expenses in some parts of the region. 3. You are investing. One of the main, if not the main, signs that your financial life is under control. This shows not only that you are living within your means, but also that you are thinking ahead, planning not just for the next month, but for the next years and decades. Investing is the crucial step to break the cycle of living from paycheck to paycheck. When we talk about investing, we often think of stocks, bonds, and mutual funds. However, investing goes beyond that. It's about putting your money to work for you, creating a source of passive income that can help secure your financial freedom in the future. This shows that you are committed to your long-term financial goals. Whether it's saving for retirement, your children's education, or buying a house, investing is a powerful tool that can help turn these dreams into reality. Compound interest shows that the sooner you start, the more time your money will have to grow. That's the logic of investing. With patience and consistency, even small amounts can turn into significant sums over time. This doesn't mean throwing all your money into risky investments in hopes of quick gains, but rather understanding your risk tolerance, diversifying your investments, and having a clear investment strategy that aligns with your financial goals and time horizon. In the United States, only approximately 55% of adults own stocks, either directly or as part of a fund, according to a Gallup report. In Europe, participation is more varied, with an average of around 20% of the population investing in stocks, according to data from the European Securities and Markets Authority. 4. You are insured. Being insured is one of the most underrated signs that you are heading in the right financial direction. Having an insurance policy, whether it's for life, health, automobile, or home, is not just a preventive measure, it's an act of financial responsibility. Having peace of mind knowing that, in the event of an unexpected event, you won't be in financial trouble. For example, having quality health insurance can mean the difference between a financial crisis and stability in the case of a medical emergency. Medical expenses are one of the leading causes of personal bankruptcy in many countries. A robust health insurance policy not only covers the cost of treatments, but can also provide access to better medical care, thus minimizing the financial and emotional impact of health problems. Another example is property or home insurance, where in situations of natural disasters or accidents, coverage can save you from substantial expenses for repairs or reconstruction. Instead of having to spend a significant amount of your savings or resort to borrowing, insurance can cover these costs, allowing you to stay financially stable. In the United States, a survey by the Insurance Information Institute reveals that about 10% of homeowners do not have home insurance, while approximately 15% of drivers do not have this type of security. In Europe, the situation varies considerably among countries, but on average, it is estimated that about 25% of homeowners in the European Union do not have any type of home insurance. 5. You don't worry about money. Be very careful with this sign. Not worrying about money doesn't mean spending recklessly on unnecessary purchases, but rather buying quality items that you truly need without worrying too much about the price. Reaching a point in your life where money ceases to be a source of daily stress is a clear indicator of financial well-being. This doesn't mean being indifferent to finances, but rather having built wealth that allows you to live with peace of mind, knowing that your needs are covered and you are prepared for the future. This financial freedom brings additional benefits. It reduces stress and anxiety, two factors known to negatively affect physical and mental health. Additionally, it allows you to make decisions based on your long-term desires and aspirations rather than reacting to immediate financial needs. This can lead to a richer and more fulfilling life, where your choices reflect your true values and goals. Beyond personal well-being, not worrying about money also has a positive impact on your relationships. Financial discussions are one of the main causes of tension in relationships. By reaching a position where money is no longer a constant source of worry, you can enjoy more harmonious relationships and support the dreams and aspirations of your loved ones. This doesn't happen overnight, but is the result of conscious choices, planning, and, above all, understanding the true value of money in your life. This state of financial well-being is a valuable goal, bringing with it a life of possibilities, choices, and, most importantly, freedom. To leave no doubt about this, let's consider a practical example. Imagine yourself strolling through the aisles of a supermarket, coming across that gourmet product you've always wanted to try. Maybe it's a special type of chocolate, an exclusive imported cheese, or a bottle of wine recommended by a friend. You hesitate, checking the price before deciding whether or not you could afford to put it in your cart. Or you find yourself in a financial position where you no longer need to worry about the price of such small luxuries. You can simply grab it, knowing that this purchase won't throw off your budget. 6. You have money and savings set aside for emergencies. Having money saved for emergencies means that you have not only planned for the present, but also have an eye on the future, anticipating and mitigating potential financial setbacks before they occur. But how much would be a good emergency fund? The answer can vary. Some experts say it's enough money to cover your essential expenses for a period of 6 months without the need to work for income. However, this time frame can vary. Some suggest 12 months, and even more conservative estimates suggest having enough money to cover 18 months of expenses. But it's up to you to define this amount, and it varies according to your financial psychology and your relationship with money and the risk you're willing to take. In the United States, a Bankrate survey revealed that only 40% of Americans have enough savings to cover unexpected expenses of more than 3 months, highlighting a considerable financial vulnerability among the population. In Europe, the situation is similar, with a Eurostat study indicating that approximately 33% of citizens of the European Union do not have the financial capacity to face an unexpected expense, suggesting that an emergency fund beyond 3 months may be even less common. 7. Your wealth is growing. This growth in wealth is the tangible result of a series of sound financial decisions, combined with discipline and the strategy of investing and saving wisely. But what does it really mean to have growing wealth? Having growing wealth means that the total value of your assets, whether in cash, investments, properties, or other forms of financial resources, consistently exceeds your debts and financial obligations. This shows that you are not only managing to cover your expenses and financial commitments, but also accumulating wealth over time. This growth in wealth doesn't happen by chance. It is the result of financial planning, which includes creating a budget, setting financial goals, and implementing a diversified investment strategy. Investing, whether in stocks, real estate, or other vehicles, is one of the keys to this growth, harnessing the power of compound interest and the market to increase your wealth over time. The Federal Reserve of the United States has published the Survey of Consumer Finances, which in its latest editions indicated that the median net worth of American families has shown a trend of growth over the years despite economic fluctuations. In Europe, similar reports, such as those published by the European Central Bank, show varying growth trends among member states, reflecting regional economic differences. While some Nordic and Central countries exhibit consistent growth in household wealth, nations in Southern Europe face more significant challenges, affected by economic and employment factors. 8. You have manageable debts. Having manageable debts means understanding that not all debts are harmful. In fact, some can be leveraged to build your wealth, such as education loans that increase your earning potential, mortgages for your own home, or investment. A clear sign of manageable debts is when you can make your monthly payments without sacrificing your basic needs or your investments for the future. Additionally, manageable debts contribute positively to your credit, opening doors for future financial opportunities, such as more advantageous loan terms or access to lines of credit with better rates. In the U.S., the Federal Reserve's report on the economic well-being of U.S. households in 2020 suggested that about 77% of adults felt comfortable with their debt situation, which could indicate a level of debt considered manageable for most. In Europe, a study by the European Central Bank on financial vulnerability showed that a significant proportion of households in euro area countries were able to meet their debt needs without major difficulties, although with considerable variations between countries. 9. You have a stable income. What does it really mean to have a stable income? It goes far beyond just receiving a regular salary. It means having a reliable source of income that not only covers your basic needs, but also allows you to save, invest, and spend on leisure and personal development without compromising your financial security. It's knowing that, month after month, you have the necessary resources to maintain your lifestyle while also working towards your long-term financial goals. A stable income also reflects stability in employment or, for entrepreneurs, a business that generates consistent profits. This doesn't mean there won't be challenges or periods of uncertainty, but rather that you have the resilience and strategy to overcome these situations without jeopardizing your financial health. This may involve diversifying your sources of income, enhancing your skills to increase your value in the job market, or innovating in your business to adapt to market changes. When you're not constantly worried about covering your next expenses, you can make decisions based on what's best for your future, not just your immediate needs. 10. You spend less than you earn. The basic rule of personal finance, Warren Buffett, one of the world's most successful investors, once said, "Do not save what is left after spending, spend what is left after saving." By prioritizing savings, you create your financial security and pave the way for wealth growth. This means that before thinking about how to spend your money, you commit to your savings and investment goals. Spending less than you earn also allows you to invest in your future. Every dollar saved can be directed towards investments that grow over time. This can be challenging in a society often focused on consumption, but it is a basic necessity if you don't want to rely on government support or financial assistance from your relatives and friends in the future. These were the 10 signs that show if you are doing well financially. And you, wizard, which of these signs have you identified in your own journey? Do you have an emergency fund that gives you peace of mind? Are your debts under control, allowing you to dream higher and reach further? I hope the knowledge shared in this video may have helped you in some way to make the journey towards financial freedom clearer. If you felt that this content helped you in any way, leave here in the comments topics you would like to find here. Until next time, Wizards.